In this webinar, we cover business meals and entertainment.
We're going to talk about meals and entertainment. Lots of special rules here. The Tax Cuts and Jobs Act eliminated the deduction for most entertainment expenses. Most, not all, most, okay? And I'm going to tell you which ones are still allowed. There are still some narrow exceptions. The Tax Cuts and Jobs Act does not affect expenses that are typically not considered entertainment depending on the taxpayer's business activity. The disallowance for deducting entertainment also does not apply to businesses that provide entertainment to the general public. Entertainment that is provided to customers, as well as food and drinks, are not subject to any kind of 50% limit and are fully deductible. For example, the owner of a nightclub can hire a nightly entertainer, and that would be a normal business expense of the nightclub. So if you have a nightclub, for example, and you hire a nightly entertainer or a DJ or something like that, that's not considered entertainment. That's fully deductible. I mean, it's entertainment for the patrons of that nightclub. But if the business itself is providing entertainment to customers, then those costs are fully deductible. Now let me give you some examples. John is a clothing designer. He attends a fashion show to introduce his new designs to potential buyers. The cost for attending the fashion show would not be classified as entertainment because the fashion show is directly related to his business as a designer. Any expenses John incurs during the show would be deductible as normal business expenses. All right, so a fashion show might normally be considered entertainment. If I went to a fashion show, it would definitely be considered entertainment. My businesses don't have anything to do with the fashion industry. So I wouldn't be able to deduct those costs. That would just be a fun trip for me. But in this case, John is a clothing designer. So this is not entertainment for him. This is directly related to his business activity, which is the activity of being a clothing designer. So all of the costs associated with this trip or with this fashion show that he incurred would be fully deductible as a business expense. Example number 2. Eugene is a sports writer who covers professional soccer. He runs a profitable YouTube channel with over 1 million followers. We're seeing a lot more of this, by the way, as tax accountants, right? People who make their living on YouTube or make their living online, podcasting or whatever, in that kind of entertainment industry. It's becoming more and more popular. I'm seeing more and more of it. Eugene attends dozens of soccer events throughout the year. He often interviews the players in person and posts the videos to his channel. He asks for player signatures on jerseys and game programs. Eugene then runs online contests for the signed jerseys. All of his income comes from sports writing and his YouTube channel. So he's in the entertainment industry, the sports entertainment industry. The cost of the sports tickets and the travel to the games would be a deductible expense. It's not entertainment for him. This is his business. He's in the entertainment industry. So all of those costs would be fully deductible because he is in the business of writing about sports entertainment. Last example. 5 Star Realty hosts open houses once a month. Now, this is not a business that's in the entertainment industry. This is a realty company. These events are advertised in the local newspaper and on the radio. So this company is a realty company that hosts open houses once a month. And they're advertising these open houses to try to get customers to come in and find out about their services. During the open house, food and drinks are provided, as well as a presentation explaining the property management services that 5 Star Realty offers. The events are open to the general public and used primarily as a marketing ploy to find new business customers. All of the costs, including the food and drinks provided during the events, are 100% deductible by 5 Star Realty. And most of the time, the way that I would report this is probably under advertising. But it doesn't matter how you would report it. The costs would be 100% deductible in this case because they are offering food and drinks to the public as part of an event to basically attract new customers. They're offering meals and drinks to the general public to get them to come in and learn about their services. Meals and entertainment exceptions also exist for company-wide events. In this case, the entertainment as well as the meals would be 100% deductible. There's no 50% limit to the meals in this case, and the entertainment would be 100% deductible. Examples include team building activities, holiday parties, and company picnics. In order to be fully deductible, the events cannot discriminate in favor of highly compensated employees. In other words, all of the employees must be able to participate, not just highly paid executives or company officers. It's commonplace for larger companies especially to have holiday parties. If they do have a holiday party, whether it's, at the office or at a different location, or whether it's after hours or during normal business hours, that's going to be 100% deductible as a team building activity. However, you have to make sure in that case that the events themselves do not discriminate in favor of highly compensated employees or highly compensated sales executives. Okay. It's fine for a company to make it a company-wide party where, for example, the families of those employees are invited. That's pretty typical. So, for example, let's say you have a company party and it's a holiday party. Let's say it's a Christmas party. It's at the end of the year. You have a holiday party. You invite all of the employees to the holiday party, as well as their families or their spouses, their significant others, that sort of thing. That's perfectly fine, as long as all of the employees are actually invited. They don't necessarily have to come, right? Most of the time, these types of events are not mandatory, but you can invite all of the employees as well as their families. And then the food, as well as any kind of entertainment that you might have, like a DJ, would be 100% deductible because it's a team building activity. Now, what some companies try to get away with, though, is they will have like an outing, like a golf outing or some company retreat, but they won't invite all of the workers. They don't want to invite the lower paid workers. They only want to invite like the executives. Oh, our top sales people, or we're only going to invite the vice presidents and the managers to this event, that sort of thing. In that case, that's not a team building activity. That's not the same thing as what we're talking about here. In order for it to be 100% deductible as a team building activity, you have to basically not discriminate against the lower paid workers. Everybody has to be invited. That means Mr. Vice President as well as the janitor. Everybody has to be invited if it's going to be deductible as a team building activity. It can't just be, the 10 vice presidents and then none of the other lower paid workers get to come. That's not what we're talking about here. In order for it to be 100% deductible, you cannot discriminate in favor of highly compensated employees. Okay? Example, Edison owns an auto repair shop with 20 employees. Every year, Edison organizes a holiday party at Christmas time. All of the employees and their spouses are invited to the holiday party. The party includes professional catering and a music DJ. The cost of the holiday party, including the cost of the meals, is 100% deductible as a business expense because it is a team-building event for the benefit of all of the employees.
Business meals. In the current year, businesses can deduct 50% of the cost of business-related meals. Any taxes and tips incurred on the meal are also subject to the 50% limit. Per diem meals provided to employees are also subject to the 50% limitation. Let me explain this. If you reimburse employees for the cost of meals, for example, let's say you have a salesperson and they're working for a company that sells eyeglasses or something like that, and they take a client out to dinner or lunch, and it's business related, it's one of their business clients, and then the company actually reimburses that employee for the cost of the meal. The company can reimburse the employee for the full cost of the meal, or the company can reimburse the employee at the per diem rate, and they can reimburse the full cost of the meal and the full per diem rate if it's done as a reimbursement to the employee. However, the business itself can only deduct 50% of that. So even if the business chooses to reimburse the employee at 100%, the business itself can only deduct 50% of either the meal cost or the per diem. The 50% limit also applies to meals provided to employees as a fringe benefit. For example, if the company purchases like coffee and snacks for the employees to eat in the break room, those are also subject to the 50% limit. Business meals are deductible if they are incurred while traveling away from home, whether eating alone or with others on business, taking customers or clients to a restaurant or other eatery, attending a business convention or reception, business meeting, or business luncheon, obtaining deductible educational expenses such as meals during a continuing education seminar. So for example, if you were to travel and take a CE class, like you go to the IRS tax forum in San Diego or Las Vegas, tax forums happen every single year. If you go to one of those forums and you go to lunch while you're there during the educational seminar, then you could deduct 50% of the cost of your business meal. Whether you decide to take actual costs, like the actual cost on your receipt from the restaurant, or whether you choose to take the per diem, it's going to be 50% of that. Food and beverages that are provided during entertainment events, such as a baseball game, will not be considered entertainment if purchased separately from the entertainment if the cost is stated separately from the entertainment on invoices or receipts. For example, if you take a client to like a golf game or to a baseball game, you cannot deduct the cost of the entertainment itself if you're just entertaining a client at one of those types of events. But if you have meals during those events and they're purchased separately and you actually have a separate receipt for that, then you could deduct 50% of the business meal, but not the cost of the entertainment. And let me give you two examples. Tamara is a licensed attorney. She takes her best client to a baseball game at Tropicana Field in Tampa Bay, Florida. During the game, they eat at Grand Slam Grill, a restaurant located within the stadium. So they're at the stadium and she's taking her client out to a baseball game, which is fine. She doesn't get to deduct the cost of the game though. The baseball tickets cost $105 each. The meal inside the park costs $80, and she receives a separate receipt. Tamara may deduct 50% of the meal, or $40. The cost of the baseball tickets would be a non-deductible entertainment expense, even if some type of business activity was conducted during the game. Sometimes on the exam, they'll give you a question like this, where you'll be forced to calculate the amount of the allowable deduction. And they'll throw all kinds of math numbers at you. But in this case, she would not be able to deduct the cost of the baseball tickets. And she also would not be able to deduct the full cost of the meal. The only thing that she can deduct in this case is 50% of the meal. So $40 would be her allowable deduction on her Schedule C, for example, if she was self-employed. Example number 2. Jamie is a self-employed realtor who takes a client to lunch to celebrate the closing of a home sale. The total restaurant bill is $88. She also pays $10 in taxi fare to get to the restaurant. Her deductible meal expense is 50% of the $88, which is $44. But she's allowed to deduct the full cost of the taxi fare. If she had bus fare, or if she paid an Uber or anything like that, or even if she used her own car, she'd be able to deduct mileage to the restaurant if she was taking a client out to dinner or to lunch. And she'd be able to take the full cost of the travel expense. In this case, it was taxi. So she could deduct the full cost of the taxi fare. And then the meal expense would be limited to 50%. And that would include any other costs associated with the meal, such as the tip and taxes associated with the meal. But the travel expense to actually get to the restaurant would be 100% deductible. Her deduction on Schedule C would be $54 because the taxi fare would be 100% deductible, while the cost of the meal would be subject to the 50% limit. And then once again, if they tell you on the exam that it's the meal and then tip and then taxes on the meal, all of that is bundled together. Basically the receipt that you get from the restaurant, you can take 50% of that and that's it. But the transportation actually to get to the restaurant to meet your client, whether you take the Uber or whether it's mileage in your own car, that would be 100% deductible. But the meal would be subject to the 50% limit. Remember that for the test. The next webinar covers travel and transportation expenses.